it's helpful to understand what exactly the DAT model is and what makes it tick in order to answer that question appropriately. So what is a DAT? At the end of the day, the business model is trying to maximize your tokens per share. Like that's how you maximize shareholder value is by maximizing your tokens per share. And so when I think about what that business looks like, it looks exactly like actually a whole other set of businesses like banks and insurance companies. I started my career in investment banking covering these what are called balance sheet heavy financial companies. And all of them also trade on book value, just like a DAT trades on NAV. And the reason why some of them trade above book value is because they execute better and they can generate yield on their asset base, which they denominate in dollars. It's just a Solana Digital Asset Treasury denominates in Solana. On a dollar basis, can they grow their dollar book value per share at a higher rate than their cost of capital through generating yield? And the yield comes in many forms. It can come through financial engineering. It can come through doing loans. And so all that is why JP Morgan trades at 2x book. XYZ regional bank trades at less than 1x book because of that execution difference and your ability to generate yield. And so when you look at what a digital asset treasury is, then it's exactly that, which is how can you generate as much yield as possible on top of your basic Solana per share or your Solana book value. And so it does turn out that the primary driver of that yield comes from financial engineering. So it's generating excitement in order to then issue capital via common or convertible debt at a premium that has your volatility through convertible debt or warrants, and use that to really continue growing your Solana per share in a creative way. At the end of the day, that will likely be 85, 90, 95% of the total value creation at a DAT is all about how well you use that capital markets flywheel, that financial engineering. The second piece, which is important, is how do you can you find base sources of yield outside of financial engineering? And I think that's what makes Solana very special relative to something like Bitcoin. Solana is a productive asset. It's a generalized smart contract programming platform on which other people can build. And in return, Solana is able to capture fees. And by capturing fees, it generates value for its token holders. And so that's why when you stake something like Solana, you can generate yield, not just from nominal inflation, but also from real fundamental value being created on the chain. And so that's very exciting. This ability to then go use your Solana, generate this high single digit staking yield or DeFi yield to really augment that core financial engineering engine can be very powerful and very additive to what MicroStrategy was already doing. The second thing is really around what DATs can, and so that's on the yield part. The second is really around what DATs can really be for an ecosystem. One of the most important, if you go back to like our ultimate job is to maximize shareholder value, and what goes into maximize shareholder value? Well, mission A is making sure that the token has good fundamental value, that people understand why the token has value. And so our ability to advocate for a Solana and really make a difference in telling the Solana story is so much higher than it is for something like Bitcoin, which is already very mainstream and well known. And so we plan to do that very aggressively as well.